Hi friends, welcome to the channel JIB and CIB Made Simple. Today we are going to discuss our IIBF CCP, that is Certified Credit Professional, unit number 3 theory portion, and the chapter name is Types of Borrower and Types of Credit Facility. So before delving into the chapter, let's see what are the topic which we have to study. First of all, we will see the objectives, then introductions, who is individual, who is agent, attorney, joint borrower, Hindu undivided family, proprietary firm, partnership firm, limited company, registration of charges under the Companies Act, and then LLP, other entities, and finally types of credit facility. So the entire chapter we will cover in 3 to 4 lecture. So let's get started with our first topic, which is based on essential function of a bank. Our methodology of studying will be the same. We will repeat the same concept 2 or 3 times so that it become very easy to understand each and everything, and added to that we will do MCQs also that will help us to retain the fact. So let's get started, which is the first concept, that is the essential function of a bank. Ever wondered what makes a bank tick? Today we will uncover the 2 essential functions of a bank and the secret behind the bank customer relationship. First of all, essential function of a bank. So bank perform activity to serve the customer. Obviously these are the 2 main motives, to serve the customer and to generate the profit. The key ideas is that there are 2 core operations, to accept deposit from the public and to lend or invest money for earning profit. So the rule is very simple. Banking means deposit acceptance and lending or investment. Let me give you one example to make it more clear. So like there, a bank take deposit from customer and give loan to earn interest. I think you are familiar with all these things. Now, the next concept we have is the nature of bank-customer relationship. You know it very well that it is legal and contractual relationship between the banker and the customer based on the types of account, based on the account types. The key idea is that, relationship change with account type, whether it is individual, trust, loan, etc. And it require legal compliance. So the rule is that very simple. Relationship depends on account type plus legal requirement plus care by banker. Let me give you one example. Like suppose you open a trust account. So opening a trust account, it requires more legal check as compared to a saving account. Right? So question may be asked that out of trust account and saving account, which requires more legal check? Answer is obviously trust account. So banking starts with clarity in the account type and legal compliance. So never skip KYC. That is the CCP master tip. So let us recall whatever topic, whatever point which we have covered here. First thing is that banking functions are 2, deposit acceptance, and second thing is lending or investment. Second point is that relationship here is directly proportional to the legal complexity of the account. More and more complex the account is, relationship care is so varies accordingly. Now let's apply the concept which we have learned through this mini MCQs. The question is, which of the following is not an essential function of bank? See, it is asking you not an essential function of the bank. Option they have given: accept deposit, lend money, issue share, invest money. See, obviously bank can accept deposit, bank can lend money, bank can invest money for profit, but they cannot issuing share. Right? Bank cannot issue share for corporate activities. This is not allowed. So this is not a banking function. Question number 2. The relationship between banker and customer depends on account type, legal requirement, capacity of customer, all of the above. What do you think is the correct one? Yes, the relationship between banker and customer depends on account type, legal requirement, capacity of customer. The correct answer is all of the above. Now you know the backbone of banking. Now friends, let's switch our focus to the next concept. Let's shift to the contract, essential wings of a contract. Ever wondered what make a contract valid? We will break down the 2 essential wings of a contract and the legal capacity under the Indian Contract Act. So the first point is the definition. So this is the 2 fundamental aspect which is required for a valid contract. The key idea is that first of all you should have capacity to enter into the contract. Second thing is the enforcement of the contract. The formula is very simple. Valid contract is equal to capacity plus enforcement. Let me give you one example. Take the case of minor. Minor cannot enter into a valid contract. Minor cannot enter into a valid contract. Why? The question may be asked why. because because capacity is missing. He is not capable of doing that. Capacity is missing, right? That's why minor cannot enter into valid contract. So capacity and enforcement both are required for a valid contract. Next point we have is the capacity to contract, which is under section number 11 of the Indian Contract Act 1872. So the definition is simple. It tells you the legal ability of a person to enter into a contract under the Indian Contract Act. So the person must be of majority age, which means more than 18 years, right? And he must be of the sound mind. He must not be disqualified by the law, right? If these three things are met, then we can say that that particular person is capable of doing the contract. So the formula is, or the rule is very simple. It says that capacity includes majority, sound mind, and no legal disqualification. Once these three conditions are met, the person does have capacity to contract. So let me give you one example. So for example, bank cannot lend to minor except for deposit account under condition, right? Bank can never lend. Why? Because minor are not capable of doing contract. So the CCP master tip is very simple. You can see contract without capacity or enforcement. It is called void ab initio. This is called void ab initio, right? Which means it is not valid. So let's just summarize the key point which we have covered. So I told you, valid contract includes capacity plus enforcement. Second formula, capacity includes majority, sound mind plus no disqualification. So three things, MSD. This is the memory trick you can remember, MSD. Majority, sound mind and disqualification. Now friends, let's apply the concept which we have learned in the form of MCQs. The first question is, which of the following is not an essential element of a valid contract? Option A, capacity to contract, enforcement of contract, consent of party, bank guarantee. Yes, you are thinking it correct. Actually, bank guarantee is not a basic element. Capacity, enforcement are the essential. These are the essential. But bank guarantee is not a basic element. So D is the correct one. Next question. Under section number 11 of the ICA, who is competent to contract? ICA, Indian Contract Act. Minor, person of majority age and sound mind, person disqualified by law, none of the above. So under section 11 of the ICA, person of majority age and sound mind is competent to contract. Yes, it is correct one. Only person of majority age, sound mind are not disqualified by law can contract. B is the correct one. Right. Now, next concept is who is eligible for bank lending. Friends, before delving into the next concept, if you are looking for a source for CCP where you will get unit-wise theory, MCQs PDF, previous year question PDF, almost all the paper which happened in the year 2025 have been covered. Also, you require videos like this, like I'm explaining each and every topics. Along with that, I'm explaining each and everything in 2 to 3 times along with MCQs. If you want to, additionally, if you want mock test, if you want to give mock tests or quizzes, you can check out our CCP comprehensive course on the app JIB and CIB Made Simple, or you can WhatsApp me on this particular number. This course is self-sufficient. It contains PDF, videos, mock test. If you cover the elements at all the things at one place, if you cover them rigorously, CCP you can qualify in the very first attempt. Only you need 1 to 2 hours of dedicated study, 30 units you have to cover, and bang on. CCP will be easy to qualify. Now let's move forward and let's see the next concept that we have. Who is eligible for bank lending? Now friends, ever wondered who bank can legally lend money to? So we will decode lending eligibility and the age of majority under Indian law. Stick around. So first thing is that bank can lend to individuals who are not minor and they should have the capacity to contract. Two words are there, not minor and have capacity to contract. So eligible person includes, he should be major, obviously not minor means major. He should have sound mind and he should not be insolvent, right? These are they are eligible person, major plus sound mind plus not insolvent. So the rule is very simple. Lending eligibility means not minor plus sound mind plus no insolvency. Let me give you one example. You can think of it like this. Suppose a 20-year-old person of sound mind can take a loan from the bank. Yes, obviously, because it is a major. He is a major, first thing, and he is a sound mind and he is not insolvent. Obviously, he can take loan. Now, there is an act called Majority Act 1875. So, law defining the age of majority in India for contractual capacity, right? So, there is a law, it defined that what should be the age of majority in India. So, the key idea is that, person attain majority at 18 years, which is domiciled in India. So the formula is very simple. Majority means age should be greater than or equal to 18 years. So let's take example of a person who is aged 17. He cannot borrow from a bank. Why? Because he is a minor. So the rule is that major plus sound mind plus no insolvency, it means safe lending candidate, right? So he should be major, he should have sound mind, he should not be insolvent, it means safe lending candidate. So the rule is very simple. Lending eligibility depends on majority, sound mind and no insolvency. And major means a person whose age is at least 18 years. And the third point is that I think this memory trick you know it very well. So the question is, as per the Majority Act 1875, a person attain a majority at which age? I think you know it very well. A person attain majority at 18 years age. Yes, 18 years is the correct answer. Next question. Which of the following is not a condition for lending to an individual? Not a condition. See the word clearly. They have written not a condition. Must be major, must be of sound mind, must be undischarged insolvent, right? And must not be a minor. What do you think? So it is a very good question. They are asking you, not a condition, right? So what do you think is the correct answer to this particular question? So obviously he must be a major. Yes, this is a requirement. Must be of sound mind requirement. Must be undischarged on requirement, but not be minor exactly. Sorry. Must not be minor. Yes, it is. But must be an undischarged insolvent. No. That's not a condition. Yes. Now let's look at the types of borrower. Now you know who qualify for bank lending, right? So I think you know it very well. Now let's talk about the types of borrower and the types of credit facility. So friends, have you ever wondered what bank check before lending? So we will explore borrower competence, HUF lending, and why asset verification matter. So good sense while contracting. A person must be in rational state of mind while entering into contract. So the key point is, rational state of mind. Very, very important. The key ideas is that, intoxicated or, delirious person cannot legally contract. Why? Because they cannot understand the terms. So the rule is very simple. Competency includes sound mind plus rational judgment. When sound mind combined with rational judgment, obviously it means competency. So that's the formula. So for example, a drunk person cannot sign a valid loan agreement. Obviously, you know it very well. Now, let's talk about the Karta. Karta or HUF. Karta of HUF. Hindu undivided family. That's called HUF. So the definition is very simple, The head of a HUF who entered into a contract on the behalf of the family. That's called Karta. Karta is the head of Hindu undivided family. He enters into contract on the behalf of the family. The key idea is that, bank must verify property offered as security and ensure other co-partner right. So bank must verify property and the property which is being offered as security and ensure other co-partner right. Bank must completely verify all these things. So the formula is that, HUF lending includes verify property plus check ratification risk, right? Let me give you one example. Take the case of Karta. Karta pledges HUF property. So bank must confirm consent of the co-partner. Because Karta is pledging the HUF property, so obviously co-partner consent must be taken by the bank, right? So this is to the context of HUF property. Now next point is asset description and signing. Full detail of the asset it must be obtained before granting any advance. The key idea is that borrower should sign in personal capacity, not on the behalf of another person. Very, very important thing. That's why full detail of the asset must be obtained. Any borrower should sign in personal capacity, not on the behalf of other person. So the formula is very simple. Advance means asset verification plus personal signature. For example, loan given only after borrower signed personally and asset detail are clear. Only then loan will be given. When the borrower signed personally, asset detail are clear, then only. So the master tip is that sound mind, verified security, personal signature, all these things combined together leads to safe lending. So the rules is very simple. Competency includes sound mind plus rational judgment. HUF lending, you have to verify property and ratification risk. That's it. Now let's do some quick MCQs. Which of the following person cannot enter into a valid contract? Person of sound mind, person who is drunk, Karta of HUF, major individual. Actually, they can enter. So this is not the answer. Karta of HUF, he can enter. Person who is a drunk, he cannot enter into a valid contract because he is not of sound mind. Before granting advance to Karta of HUF, the bank should ignore property detail. No. Verify property offered at security. Exactly. Assume content to consent. No. You cannot assume it. You have to take consent. And allow signing on the behalf of another person. No. Yes, this should verify the property. Right, verification of property and the co-partner right is essential for HUF lending. Please note it down. So now you know the essentials of safe lending. Please do like, share and subscribe for more quick banking concept explained in simple terms. Now let's shift our focus to the minor. Can a minor take a loan from a bank? The answer might surprise you. Today, we will uncover why contracts with minor are void and what happens if guarantor is involved. Stick around for some important memory tricks and quick MCQs. Let's see who is a minor. First of all, let's see who is a minor. A person who has not completed 18 years of age as per the law, he is considered a minor, right? First thing is that minor can never enter into a valid contract, because any contract with minor is considered void ab initio. That's called, void from the start. Right. So the formula is very simple. Minor means age less than 18 years. No contractual capacity. So example, a 16-year-old cannot take a loan from a bank. Now the next concept is effect of advance to minor. Yes, if you give advance, what will be the effect? So loan given to minor is legally unenforceable. Clearly they are mentioned, legally unenforceable. Even if backed by collateral or guarantor. If it is backed by collateral or guarantor, no matter what, it is legally unenforceable. The key idea is that, guarantee is invalid because the primary contract, which means minor plus bank, is considered void. That's why guarantee is invalid. Now the rule is very simple. Minor loan includes two things: void contract plus no legal recovery. For example, bank cannot recover dues from guarantor if loan was given to a minor. Suppose loan was given to a minor. How can bank recover dues from guarantor? No way. Right. So guarantor is also invalid because the primary contract is void. How can guarantor? So bank cannot recover dues from guarantor because loan given was to a minor. I hope it is clear. So contract with minor void from the start. Just remember it. Even guarantee won't save you. To the context of bank I am talking about. So the two rules is that minor means age less than 18 years, no contract. Minor loan, void contract plus guarantee invalid. These are the two things which we have learned here. Let's apply the concept. A contract entered into a minor is valid, voidable, void ab initio, enforceable with guarantor. The correct answer is void ab initio. Yes, it is void ab initio. My God, minor lack capacity. But if a bank grant a loan to a minor backed by a guarantor, can the bank recover from the guarantor? The question is, suppose a bank grant a loan to a minor and that is backed by a guarantor. Can the bank recover from the guarantor? Option A, yes, always. Option B, no, because primary contract is void. Option C, yes, if guarantor is solvent. Option D, yes, if minor turns major later. Actually, say in this particular case, the answer is no, because primary contract is void. How can bank recover from guarantor? No, not possible. Right. So I hope these two things are crystal clear right now. Now let's talk about the special circumstance for advance. A special circumstance for advance. So friends, can a bank ever lend for a minor benefit? Yes, but only under special circumstance. Today we will decode valid contract for minor and the role of guardian in borrowing. Stick around. So the first thing is that when advance can be granted to minor. Minor cannot be bound by normal agreement. They can never be bound by normal agreement. But contracts for necessities are valid. Under the section number 68, let me write down the section number also. Under section number 68 of the ICA, Indian Contract Act. What is the key idea? It is valid for supply of necessities like education, clothing, medical treatment, shelter, benefit of minor estate. So the rule is that, the rule is very simple, that valid minor contract necessities, right? Minor can enter into a contract provided it is proved valid. That means it is for necessities under section 68 of the ICA. One example I can give you, that bank can pay for minor school fee under necessity contract. So that is an exemption we are talked about. Okay. Now friends, the next question is, who can borrow for minor benefit? Very important question. Guardian can borrow on the behalf of minor as per the personal law. Guardian can borrow on the behalf of minor as per the personal law. The key idea is that, under Hindu Minority and Guardianship Act, there is an act. Act is called Hindu Minority and Guardianship Act 1956. So under this act, father is the natural guardian and mother is also a guardian if father is absent. And then we have the testamentary guardian, which is appointed by the will, right, by the court. So this is Hindu Minority and Guardianship Act 1956. Natural guardian is father, mother is also a guardian if father is absent, and testamentary guardian is appointed by will. So the rule is very simple. If you are borrowing for minor, take guardian authority plus legal compliance. For example, father borrow for minor's medical treatment right, under guardianship law. So the master tip is that necessity, valid contract. Guardianship means legal borrowing for minor benefit. So necessity, in the case of necessity, yes, contract can be done, and guardianship in this case, legal borrowing for minor's benefit. Now, friends, some key rules which we have covered, that valid minor contract include necessity, which include these are the things for necessity, and guardian borrowing, natural guardian or testamentary guardian, both of them can borrow. So guardian can borrow on the behalf of minor as per the personal law. And who are guardian? Just now I told you. Now, friends, let's do some MCQs. Question is, which of the following is a valid contract for minor? Buying luxury car, paying school fee, taking business loan, buying property. What is the valid contract? That's the question. So buying luxury car, not a contract. Paying school fee, yes, this is a necessity, right? So education is a necessity, so it can be a valid contract. Now question 2 is, under Hindu Minority and Guardianship Act, who is the natural guardian of a minor? Mother always, father and mother. Yes, father is a natural guardian and mother is another natural guardian if the father is absent. So B is correct. Now, friends, let's shift our focus to the guardianship and documentation for the minor role. Can guardian borrow on the behalf of minor? Answer is yes, but only under a strict legal rule. So we will decode guardianship under different law and documentation that bank need for minor loan. First thing is guardianship under various law. Legal authority of guardian to act on the behalf of minor under different personal law. So the key idea is that Guardian and Ward Act 1980 or 1890. So court can appoint guardian before minor turns 18. So court can appoint guardian right before the minor turns 18. So there is something called Mohammedan law. That's called Mohammedan law. What does it say? It says that father is the natural guardian. In absence, executor appointed by the father will. In their absence, executors is appointed by the father will. Right. Father is the natural guardian. In their absence, executor will be appointed. What the Christian law say? Christian law says that guardian appointed by court for the minor property. And what does the Parsi law say? Same as the Christian law. So the rule is very simple. Guardianship means personal law plus court appointment if required. So one example I can give you, that under the Mohammedan law, father is the natural guardian of the minor. Next concept is documentation for the minor loan. Legal documents required when guardian borrow on the behalf of minor. The key idea is that guardian must describe himself or herself as guardian. First thing. Second thing is that minor estate not liable for debt. Third thing is that document must specify the purpose, which is the necessity for the benefit of minor estate. So that these are the key ideas that just now we have talked about, right? He must declare himself. Minor estate must not be liable for debt. So the rule is very simple. Valid loan documents, it includes guardian declaration plus purpose detail. So one example I can give you. So guardian sign loan paper stating that funds are for minor education. Yes, they can do that. Guardian can sign loan paper stating that funds are for minor education. So that is the point. Guardian borrowing, it includes court compliance plus clear documentation of necessities. Right. So the formula or rule is very simple. Guardianship, it includes two things: personal law plus court appointment. And if we have valid documents, it includes guardian declaration plus necessity detail. So let's apply the concept to some MCQs. Under the Mohammedan law, who is the natural guardian of a minor? Mother, father, obviously is father. What must document for minor loan include? Guardian declaration and purpose of borrowing, minor signature, guarantee from third party, court apply. So answer is guardian must declare, and he must declare the purpose of the borrowing. So first of all, guardian must declare the status and specify necessity for which the funds are being borrowed. So he may say that the fund is being borrowed for study of the minor's education, right? That's the purpose. That's a clear-cut purpose. Now the legal framework for guardianship and the minor loan. Friends, have you ever wondered, can a minor sign a promissory note or be a part of partnership? Today we will decode the legal position of minor under the Negotiable Instrument Act and the partnership rules. Let's talk about it. First of all, minors and negotiable instrument. Minor can draw, minor can endorse, deliver and negotiate instrument, but cannot bind himself. They can draw, endorse, deliver and negotiate instrument, but cannot bind himself. So the key idea is that, instrument remain valid against all the party except the minor. Instrument remain valid against all the party except the minor. That is the key law. So the formula is very simple. Liability means all the partner minus minor. Right. So liability means take the case of all the partners, subtract the minor. For example, minor sign a promissory note. So not liability on minor, other remain liable. That's the point. So minor can draw, endorse, deliver, negotiate, but cannot bind himself. That's the point. What about partnership? So minor cannot be a partner, but he can be admitted to the benefit of partnership. So minor cannot execute document on the behalf of the firm. If it is done, agreement binds other, not the minor. That's the point. Suppose first thing is that minor cannot execute the document, but if it is done, then minor cannot, nobody can bind him. Agreement bind other but not the minor. That's the point. For example, minor enjoy profit share but cannot sign loan document for the firm. He will enjoy the profit share, but he cannot sign loan document for the firm. That's the point. Now banker's precaution, very very important aspect. See, in your book it is mentioned, but not in detail as detail I am providing you, so that you have conceptual clarity in your practical life also, as well as for your CCP examination. So what is the banker's precaution? Banks would not allow advance where minor signature is security. Never allow advance where minor signature is security, because record minor date of birth, obtain signature after majority to confirm liability. Advance security, no minor signature. Bank diarises DOB and wait for majority before confirming liability. That's the point. So minor means low liability, benefits is allowed, authority is denied. So three things which we have discussed. First of all, NI Act rule, valid instrument, minor liability. Minor in firm, benefit only. Right, that's the point. Now let's apply some MCQs. Apply the concept in some MCQs. First question. Under section 26 of the NI Act, minor can bind himself by promissory note, draw and endorse instrument without liability, be liable for all the parties, act like a guarantor. No. Minor can draw, minor can endorse instrument without any liability. That's the peculiarity of section 26 of the NI Act. Next question is, can a minor become a partner in the firm? Yes, with full right. Yes. No, but can enjoy benefit. Yes, if the guardian consent. Yes, if the court approve. Yes. Actually, he cannot become a partner, yeah, but he can enjoy benefit of partners. So now the legal limits for minor in banking and as well as the business. Now let's shift our focus to the next concept. So can bank lend to Nasin women? Yes, but with extra care. So we will decode who they are and the precaution that bank make to ensure safe lending. So let's talk about the Parda Nasin woman. So this is a woman who observe complete seclusion, right? She observe complete seclusion as per the community customs. Complete seclusion as per the community customs. So she has legal capacity to contract, but there is a risk of undue influence. Obviously, risk always exists. So we talk about the contract validity. So we have the free consent plus no undue influence. So bank can grant loan to Parda Nasin woman if consent is verified. If his bank is verified the consent, bank can give loan, grant loan. Now banking precaution. So it measures the bank that must take while dealing with Parda Nasin women. First thing is that do not refuse advance, secure with collateral. Maintain record of transaction. Each transaction must be witnessed by an independent person, preferably a lady who is known to the bank. Conduct transaction in presence of a bank officer who can identify parties. Explain verification requirement to Parda Nasin women and obtain the consent. So the rule is very simple. Safe lending includes collateral plus independent witness plus officer presence. One example I can give you, like suppose loan sanctioned with collateral and witness by plus collateral plus witness. These three are required. Consent, collateral plus witness, risk-free lending to Parda Nasin women. Right. So the formula is that contract validity, it includes free consent plus no undue influence. Right. This is to the context of the first topic which we have discussed. Right. Regarding the Parda Nasin women. Okay. Free consent plus no undue influence. That is the first point. Second point is that safe lending means take the collateral, take the witness plus officer presence in case of any transaction. Why is special care needed when granting loan to Pradhan women? Option A, they lack legal capacity. Yes, no. Actually, the point is risk of undue influence in contract execution. Exactly, this is the point. That's why special care is required. Though they are legally competent, undue influence exists due to the seclusion. Which of the following is not a precaution for lending to Pradhan women? Not a precaution. That's the question. Not a precaution. Option is an independent witness, collateral security, presence of bank officer, minor signature. Tell me what is not a precaution. So the answer is, actually minor signature is irrelevant. Precaution focused on consent verification and security. Independent witness, yes. Collateral security, presence of bank officer, these are the consent. Now friends, let's talk about the laws of agencies. So law of agencies, and obviously we are just continuing with the banking precaution. What kind of precaution bank must take? So ever wondered how an agent can legally bind a principal, or what right an agent actually has? So let's decode the law of agency in the simplest way possible. First of all, who is an agent? Agent is a person employed by another who is called the principal. Agent is employed by principal to act on their behalf under the law of agency. It is governed by the chapter 10 of the IC 1872. So the key point is that agent can bind the principal to the third party by an act within the apparent authority. So agent can bind principal to third party by an act within the apparent authority. Authority may be express, authority may be implied, right? In emergencies, the agent act prudently to protect the principal properties. So agent can bind principal to third party by act within the apparent authority. The formula is very simple, agency means principal plus agent plus authority. PAA, right? Principal plus agent plus authority. Authority may be express or implied. So one example I can give you, like you can see, an agent sign a contract for goods on the behalf of the principal. Yes, he can do that. Now let's talk about the rights of an agent. You see, agents have legal entitlement under the agency contract. Agents have legal entitlement under the agency contract. So remuneration, what is remuneration? Payment agreed unless misconduct occur. Right? Payment agreed unless the misconduct occur. Then we have the right to retention, which means they can retain money received on principal account for advance or expenses. Agent can retain money received on principal account for advance or expenses. These are two important things. Agents have legal entitlement under the agency contract, remuneration, right to retention. The formula is very simple. Agent right means remuneration plus retention. So one line example I can give you. So agent keep fund to cover business expense before sending the balance. So agent's powers means authority plus prudence, and right means pay plus retain. So the formula is agency means principal plus agent plus authority, and agent's right is they have remuneration plus return. So the question is, which section of the ICA define agent and principal? It 181, 182, 183, 184. Correct answer is 182. It covers agent and principal. The next question is, which of the following is not a right of asset? So not a right of an agent. Remuneration, right to retention, right to sell principal property. Yes, this is not a right. You cannot sell principal property without consent. You have to take the consent. Right? Proper consent should be taken. That's the point. So remember, agency means principal plus agent plus authority, and agent right means remuneration and retention. Now, the next thing is banking precaution and termination of agency. Let's talk about the banking precaution. So before granting a loan through an agent, what should a banker check? And how does an agent legally end? Let's break it down. So bankers precaution. So steps that the bankers must take before granting loan through an agent. The first thing is that key idea is that, so never rely only on apparent authority. Call for deed of agencies and verify extent of authority. So check for deed of agencies and verify extent of authority. Check for any restrictions requiring principal approval. Is there any restriction requiring principal approval? Ensure that document clearly state execution by the agent on the behalf of the principal. And keep a copy of the deed of agency with loan document. So the rule is very simple. Safe lending means verify authority plus deed of agency plus principal consent. One example I can give you that bank check deed before accepting agent signature on loan paper. So bank always check the deed before accepting agent signature on the loan paper. So always verify agent authority. Deed of agency is your safety seal. What about the termination of agency? So legal way by which agency relationship end, that's the legal way is called termination of agency. So the key point is that principal revoke authority or agent renounces agency business. So the rule is that termination means either revocation by principal or renunciation by agent. For example, principal cancel the agent authority. Cancel the agent authority, obviously agency will end. So always verify agent authority. Deed of agency is your safety seal. Please remember it. So safe lending means verify authority plus deed of agency, and termination means revocation or renunciation. So question is, which document must a banker verify before accepting an agent signature? Power of attorney, deed of agency, partnership deed, guarantee bond. Correct answer is deed of agency. Under section 201, agency terminate when agent changes address, principal revoke authority, or agent renounces business. Exactly. This is the condition, agency termination. Now let's talk about the attorney, power of attorney and banking precaution. So friends, you know it very well that what is power of attorney? Why is it so critical in banking transaction? Let's decode POA, its legal requirement, and quick memory trick to never forget. So attorney, attorney is a specific concept under the broader law of agency where a person is authorized to act on the behalf of another through a power of attorney. So it is a specific concept under broader law of agency. Person is authorized to act on the behalf of another through a power of attorney. It is governed by the Power of Attorney Act 1882 and the Indian Contract Act 1872. So POA is an instrument, empowering a specified person to act for and in the name of the person executing it. Right. So for banking, loan sanction or disbursement must be based on POA executed by the principal. Right. Must be based on the POA executed by the principal. I hope it is clear. Now friends, the rule is that, attorney rule means valid POA plus principal authorization. So borrower give POA to attorney for signing the loan document. Borrower is give POA to attorney for signing the loan document. That's the point. What is the legal requirement for POA? POA must be formally executed and registered to be valid. Right. He must be formally executed. Section 33 of the Registration Act 1908. It says that POA must be executed in the presence of prescribed authority for recognition. Only document rely upon is the power of attorney. So the valid POA means executed plus registered as per the law. So one line example also they have given, like POA signed before registrar is valid for banking transaction. So remember, never rely on verbal authority. Insist on registered power of attorney. So what we have discussed, attorney authority. First of all, you should have valid power authority and principal authorization. Valid POA executed plus registered. Section 33 of the Registration Act. So the question is, which act defined power of attorney in India? Obviously, Power of Attorney Act 1982. Next question is, for a POA to be recognized under the banking law, it must be executed and registered as per the Section 33 of the Registration Act. Option B is the correct one. Now friends, let's talk about the attorney scope, restriction and termination. Very, very important. So does an attorney have an unlimited power? Can a power of attorney survive death? Let's clear the confusion with simple rule. So first of all, scope of the attorney power. Attorney authority is limited to what is stated in the POA document, power of attorney document. Whatever is stated, that is limited to that only. The key idea is that POA can be specific, POA can be general. Bankers must check for restrictive clause, like power to borrow or power to overdraw. These are called restrictive clause. Bankers must check for these restrictive clause. If borrower power is absent, seek principal written approval. Suppose borrowing power is absent, you seek principal written approval. Avoid vague condition like during my absence from the country. Right. Avoid this vague condition. So the formula or rule is very simple. Attorney power means POA clauses only. No implied power. Right. Attorney power means POA clauses only. No implied power. For example, attorney cannot borrow unless POA explicitly permit it. That's the point. Attorney cannot borrow unless POA explicitly permits it. So that is why check the POA clauses carefully. No borrowing power means no loan. What about the termination of POA? POA end upon the death of the principal or death of the attorney. The key idea is that on one side we have donor, on one side we have donee. Donor means the person granting POA. Donee means the person receiving POA. So principal is the donor, attorney is the donee. So POA does not survive death of either the party. Right? Banks would insist on ratification by principal for act done by authority. So this simply means, termination means death of donor or donee. Right? Either of them death, that's all termination. POA become invalid if the principal dies before the loan disbursement. So POA become invalid. Power of attorney become invalid. So they do not survive the death of either the party. Please understand. So either bank insists on ratification by the principal for the act done by the attorney. So the thing is that, just remember this point, that attorney power are under POA clauses only, and termination means death of donor or death of donee. That's it. So the question is, which of the following terminate a power of attorney? Expiry of loan term, death of principal or attorney? Yes, exactly. B is correct. Before granting a loan based on POA, a banker must assume borrowing power exists, check POA for borrowing clause, accept vague condition. No. Check POA for borrowing clause. Exactly. So friends, that is all in the free part. Next part will be available in our paid session. If you want to get access to those, you can WhatsApp me on this particular